Hey everyone, I hope you guys are doing well. Today we're looking at Pinterest once again and we're going to have a breakdown of the earnings. As a reminder, the stock dip of about 76% in the past year. You can see it in the graph. And after the earnings, the price literally jumped up about 13%. So let's get right into it. So these are the earnings report comparing the Q1 of 2021 with the Q1 of 2022. We can see that the revenue increased by about 18%, which is good. This being said, keep in mind that the company had to increase their sales and marketing expense by about 33% in order to generate those revenues. We can also see that the net loss decreased by about 75% comparing those two quarters, which is pretty good. Now, the reason why the net income was negative both in the first quarter of 2021 and the first quarter of 2022 is because, as you can see here in the graph of the revenue, the fourth quarter of every year is the strongest quarter in terms of revenue for the company. The reason for this is really simple. It's a quarter where it's the holidays basically. So December, Christmas, when the retailers buy the most, and this is why the revenue are peaking. Now, the quarters that we were comparing is basically the quarter right after this peak, which was the first quarter of the year. So this is what explains these levels of net income. So here we can see that the revenue increased for all of the regions where Pinterest operates. So for US and Canada, an increase of 15%, 27% for Europe, and 152% for the rest of the world. Obviously, the revenue coming from the rest of the world doesn't account for much of the revenue for Pinterest. This being said, I think that both Europe and the rest of the world both have a lot of room left to grow. Now, for the monthly active users, we did see a decline in every single regions, and we're going to see a possible explanation for this right away. Now, like we said, the rest of the world doesn't account for much of the revenue of the company yet, but if it continues like this and the average revenue per user keeps increasing fast, the revenue coming from that region could explode, like literally exponentially. So this is the kind of growth that we would be looking at for the next quarters as well. All right, so here we have the Consumer Confidence Index. We can see that right now we're getting pretty low. And just as a reference, the drop that you see here is the financial crisis of 2008. So we can see that we're not too far away. And the factors that could explain this right now are the high levels of inflation, taking away the purchasing power of retailers and making them less interested into going through platforms like Pinterest to shop. So that could be one of the reasons why we saw less monthly users in the last quarter. We are now at the financial half. My favorite part about Pinterest, it has a current ratio of 12.25. That's like incredible. There's no financial distress at all for this company. The intangibles as a percentage of total assets only have 1.73%. So most of the assets are physical, which is good. Shares are increasing by almost 5%, but this is not too alarming because most of the shares were purchased at once in 2019, and we can see that from there hasn't been much more dilution, so I'm not really worried about that. All right, what's really interesting about the financial health? Two things. First of all, the company has zero debt. You literally can't go bankrupt if you have no debt, so that's amazing. Second of all, Pinterest currently holds a total cash and equivalents of about $2.7 billion. That's a lot of money, especially when your market cap is only at $14 billion. So basically 20% of the company that you're buying is cash. So you can discount that from the price that you're going to pay for it. And this would bring you to a price per share of $16.96. So if you're an investor or someone who's looking to learn about investments, this is the kind of analysis that we do in this channel. We look at companies focusing on their fundamentals and you try to find undervalued stocks in the market. So if this is something that is interesting you, feel free to subscribe. It will really mean a lot. All right, here I just want to mention something I love about this company is how well they've optimized their profitability over the years. You can see that from 2016 to 2021, their revenue increased by 8.7 times, where their cost of revenue only increased by 3.3 times. And the company has a gross margin of about almost 80%. And by the way, this is almost similar to Facebook, just to give you an idea. The operating margin is at 12.66%, net margin at 12%. Most importantly, the free cash flow margin is at 29%, which is pretty good. All right, now for the valuation, we can see that the current PE is at 46 and the price of free cash flow is at 20.65. Already, the price of free cash flow seems really interesting at only 20 for a company that is growing fast. And we're going to see right after what analysts think about the growth, and you're going to see its important growth. If you now account the total cash that the company has, like we said, this would bring us to a PE ratio of 34 and a price to free cash flow of 16.6. This is really low, and the company is growing fast too. I mean, we saw that the revenue increased by 18%, but if you now look right after, you're going to see how analysts are expecting the revenue to grow in the next 5 years and the earnings. this is a really low valuation. So let's go right into it. So for the analyst insight, we can see that the average price target for the 1 year is at $38. This is already an 82% upside. What I want to focus more is the revenue and the earnings per share estimates. So on average, for the compounding annual growth rate of the revenue for the next 5 years, they're expecting about 24%. That is fast growing. That's really fast growing. And the earnings estimates is at 43% for the next 5 years. So I don't know about you guys, but a price to free cash flow of 16 for this kind of growth, it seems pretty cheap to me. So here the only red flag that I really found is that a lot of insiders are selling the stock. So here co-founder, chairman of the board, SVP, head of the products, CFO, CFO. Basically a lot of insiders have been selling. And as you guys know, insiders usually know more than what we know from the outside of the company. But really that's about the only red flag that I really found about this company. So that was it for Pinterest, guys. If you enjoyed, please subscribe to support the channel and I'll see you on the next one.